This is the perfect day that describes what we're calling the COVID air pocket. So we have a linearity issue, which is you can't get there from here without going through a lot of bad news and some slowdown in the real economy. And we came into today, yes, better vaccine news, but also the VIX went from 40 to 22. We had a remarkable action in the market over the last 2 to 3 weeks, and a lot of good news has been priced in. The cyclicals have rallied, and so you're really primed for the good news for the cyclicals to be priced in here. Ultimately, days like this will be a gift, and pullbacks are buyable, but there'll be more bad days probably, simply because COVID shows no sign of really stopping the economic damage yet. On the other hand, we will have a boom the second half of 2021, and the market will start pricing that in.
So the question, I guess, is what happens in the short term, Alicia, in this air pocket you describe, and is there a potential to have a double dip recession if we start to get more restrictions, like we heard from New York City today and across the country? Even if we don't have a full shutdown, how close are we to that? And do you still want to be buying cyclicals if that's the case?
So it's a really interesting question. We think that you're going to get more restrictions going forward. They're not going to be called lockdowns, but clearly there's going to be more restrictive behavior. If you look at the high frequency data, mobility is already slowing down. So you'll start to see that in economic activity. We don't think there's a double dip recession here. It's just a slowing pace of growth. It will be reflected in the sectors. So probably the cyclicals come in a little bit, but they will be buyable. And they're buyable because we're going to see growth on the other side, real growth, cyclicals moving. You know, earlier in the year, the bounce off the bottom was less about cyclical growth and more about transfer payments to keep households afloat. That's a very different thing than rising yields, steepening yield curves, and actually having a self-sustaining economy, which we think will happen next year.
Shepard Smith here. Thanks for watching CNBC on YouTube.